Happy Monday. This is the morning show here on Stock Market TV. I'm Spencer, JC. Strazza lost his voice, apparently, and he has a little presentation he's doing later. So we're going to let Strazza rest his voice today. He'll be back tomorrow. But I got JC back, and we missed him. These guys, they left me last week. They went off to New Orleans. They left me home, and looked like they had a lot of fun. I don't know. We'll talk about it with JC. We'll bring him on in a second. Well, Jason Purrs stopped by today. We'll have Kenny Glick stop by today. Yeah, we have a lot to catch up on because we haven't heard from JC in about a week. So don't know what's in his brain. Don't know what they talked about last week. I know there was a lot of charts, but I can only guess as to the fun that was had. So if he's ready, chat, if you're ready, I'm ready. So let's go.
All right, we are back, baby. Good to be back. Feels good.
Yeah, good to have you back. We missed you. It looked like you had a lot of fun and ate a lot of seafood. That was my conclusions. My question for you was: was it hot and muggy or no?
Wasn't too bad. I mean, for New Orleans, it could have been a lot worse. That's for sure. Okay. Let me tell you something. So, for those who don't know, we do this portfolio accelerator. We get together 3 times a year. I mean, we get together virtually once a week and share ideas for an hour, and everybody comes into the call, and it's great. We took it to the next level, and we get together for 48 hours, 60 hours or so. Turn a 1-hour meeting into a 2-day meeting, and man, Spencer, how we always, this is the first one you ever miss, actually, because Spencer's pregnant. So Spencer didn't come because if he's down in New Orleans boozing with us and his wife goes into labor, that's a problem. So we wouldn't let you do that, buddy.
That's not good.
No, it's no good. We had to literally have an intervention with one of my buddies who we had a bachelor party, and he was in a similar boat, and he was thinking about coming. And we're like, bro, you can't come. You're not invited. You have to stay home. So we didn't have to convince Spencer. He knows better. Good on you. But
yeah,
how we always say, how are we going to top this? New York was so good. Sonoma was so good. Chicago was so good. Like, how are we going to do? We figured it out. Like, it was just, this one may have been the best ever. Stosh was actually pinging me over the weekend. Him and I, we shut down Lafitte's, which is like an old pirate bar down there. We shut it down, and he's like, dude, that was awesome. So he said it was the best one better. This is Stosh, and he's been to all of them, I'm pretty sure.
Damn. Best one ever, and I missed it. Oh, well.
Listen, I mean, just the conversations throughout the day were awesome. The food and, the partying in New Orleans obviously is awesome. What's funny is that, like, we're like in this like nice civilized hotel. We're at the Sonesta. It's lovely. It's like really nice and like quiet and peaceful. And we're in there talking markets, drinking coffee, just working stuff. And then you just like open the door and walk out to Bourbon Street, and it's just like chaos. Like it's you know what I mean?
Yeah.
Like it's just the difference between what's happening inside the hotel and what's happening outside the hotel. Very, very different.
Very alarming. Good. Well, I'm looking forward to seeing. I know there are some pictures. I'm sure we'll share a few later on in the show.
Before we get into the state of the markets, throw up the first couple of slides there. You see, this is on the bus. This is on the first night on the way to the crawfish boil. Shout out Blair. Blair over at Ritholtz Wealth Management lives down there. She hooked us up with a great spot. Look at that crew, dude. Look at that crew blasting hip hop on the way. Look at Weitzel, Straz is in there, Grant. Look at Slick Rick in the house, Domino, Kunal. I mean, we had a crew. Go to the next one so you can see, dude, this feast was so good. It was off the beaten path. It was like 10, 15 minutes away from Bourbon Street, and man, was it good. Nothing fancy, nothing extravagant, just good eating, good, simple, clean eating. Everybody was thrilled about that. So just wanted to give everybody a shout out there. It was awesome.
All right. I just dropped a link in the chat. I'll throw it on the screen as well. Here, I'll do a few things. So there's a QR code, but I'll also throw throw the URL up. If you want to be at our next event, it is going to be in Toronto in September. Don't have an exact date, but we know Toronto and we know the second half of September. So the link is up there, portfolioaccelerator.com/apply. And we do keep these events pretty intimate, right? We don't
by design. It was
right,
awesome.
by design. I thought the picture, if I can go back, of the coach bus was interesting because it looks pretty full. JC, it looks pretty full to me.
I don't think there was an empty seat in that thing. So we
need a bigger bus. Maybe we need a bigger
bus
next time. I don't know.
That's because Michael Martin met us there because he was like running late. He had a meeting or something like that.
Oh boy. Okay. Anyway, there's a link. Check it out. Talk to Mary. See what has to happen.
Sick. It was so good.
Cool. All right. Glad you guys had fun.
You didn't, Spencer. We did.
You didn't miss much in terms of obviously you were watching markets. It's not like you were, in the black hole.
Oh, we were putting trades on, baby. You know us.
Yeah, but it was wasn't it like a quiet week? I mean, you didn't not a lot. Did anything happen? I mean, a
lot of us went into the week super long, a lot of crypto stuff. We went into the week super long, a lot of speculative growth. So, a lot of us were making a lot of money while we were down in New Orleans. Right, cool. Carrie was like, I'm killing it. And Mary was doing well. Strazza was crushing it. I did pretty well myself. Good. So we were having fun. We were making money. We're putting on new trades, all of the above.
All right. Let's do a state of the markets. Markets are getting crushed this morning, JC. Down sharply on news of a U.S. credit rating downgrade.
Dude, the fact that these credit rating agencies still exist is the joke.
Can someone remind me which number is this, the second or the third downgrade that we've had?
It's the third. So there's three clown shows. There's Fitch, S&P, and Moody's. Yeah. The following question is wow, those companies still exist? Yes, believe it or not, these rating agencies still exist. They figured out that they didn't embarrass themselves enough during the great financial crisis. They want to embarrass themselves and their employees and anybody willing to listen even more.
I find it odd that you would talk smack about S&P and Moody's, considering the way
S&P
they're
Global sent us a cease and desist one time. Remember?
Okay, fine, them. But Moody's, that's near an all-time high, man. That was not an all-time high before Liberation Day.
Yeah, it's probably because of their credit rating department.
Hey, I'm just saying, all-time high is all-time high. I don't really care.
Speaking of all-time high, All Country World Index, new all-time high. Bitcoin, new all-time high. Let's roll.
Let's do a little state of the markets.
All right, ladies and gentlemen, we got the Dow futures down about 0.5% this morning, 42,500, down about 250 to the downside. S&P's down 1%, 5,900 and change. You got the NASDAQ 100 futures leading the way lower, down 1.5%, 21,200. 30-year bond futures getting the crap kicked out of them this morning. Down 1.5% for 30-year bond futures, under 112. Big move there. Crude oil down 0.5%, 61.66. You got copper up 0.75%, 463. You got gold up almost 2%, you had 32.5. Silver up 1%, 32.70, with the VIX up to 19.5 over in funny money land. Whoops. What did I just do? Oh no, I just lost my. Hold on, guys. I just lost my I pressed the wrong button. What did I
Funny
just
money
do?
land, Bitcoin down 4%, ETH down 4.5%, Solana down 7%, Cardano down 5.5%, XRP down 5.5%. That's what you want to know.
Total crypto market cap 3.18 trillion for crypto market cap. What stands out from the futures this morning?
I mean, kind of waiting for a little bit of a pullback. So you got just a nice, healthy, normal pullback going up every day. Even though last week was a little bit every day. It was small gains every day. But pullbacks aren't bad. So I'm here for it.
Well, I mean, just think about it. Just over the last 6 weeks, you got the NASDAQ up 25% over the last 6 weeks. You got Germany up 23%, All Country World Index up 20%, S&P's up 20%. Meanwhile, you've got in that period gold up 6%, treasury bonds down.
Pullback is a strong word there. I'm being a little bit facetious because we have fallen all the way down back to where we were on Thursday. So
Yes, indeed. So we sense the sarcasm there, Spencer. Appreciate
I,
you.
I just I just want to make sure that's clear to everyone that I am being
Yeah.
motivated. All right.
Spencer's just having a little fun this morning. Having a little fun. No big deal. We're
No.
allowed to have fun around here. Can we just start out? I got something funny. Here, throw up slide 7, please, there, Mr. Spencer.
Slide 7. Is it a new slide 7?
It is the OG slide 7.
Okay. What is this? The 10-year. Okay.
You know, I just find the whole thing to be hilarious. That interest rates have started going up as soon as the Fed started lowering interest rates.
It's a relationship that's not set in stone, clearly.
No, it's. I mean, you know, listen. I find humor in places all over all over the internet, and the fact that interest rates started going up as soon as the Fed decided to start lowering interest rates. I mean, if you don't see the humor in that, I mean, I just don't think you're having any fun. So we had 50 bips back in September. You had 25 in November, 25 in December, and then they stopped. And interest rates have continued higher.
But it's funnier if you look to the left side of the chart, JC, because interest rates were falling.
They were, and then the Fed said, "Up, we're going to start lowering rates," and then the rate said, "Okay, we're going higher." So good, so good, so good, so good. All right, and then so what does that mean? Oh well, JC, funny, haha. But like, you know what? How do we make money off of this funny, haha? And if you go to the next chart there. You know, I think it's interesting because the dollar has gotten absolutely destroyed, right, this year. And that sentiment it has unwound, right? So the positioning coming into the year with commercial hedgers short the crap out of the dollar, speculators buying the dollar, that has completely unwound. Hedgers are actually net long the dollar. So if you get that dollar bounce now, I mean, look at these two charts. Tell me the dollar and crude oil haven't been trading together.
I mean, they look pretty damn correlated to me.
They look pretty damn correlated to me. That's exactly right. Throw up the energy. This goes back. This is a quarterly candlestick chart. The next one there. This is a quarterly candlestick chart going back to the great financial crisis highs. Fun fact, Mr.
Quarterly
Spencer
charts.
Israel. I know how much you love your fun facts. The only sector in the S&P still below the great financial crisis highs.
You don't drop a quarterly candle on us very often, so
I know, but this one really kind of makes the point, don't it?
It is the only sector still below its GFC highs.
Not even close. Like not even close.
I mean, it looks kind of close. What?
No, what I'm saying is no other sector's even close. Like every sector's gone.
Oh. Cool. Okay. Catch up mode. that's what you guys are.
I mean, look at the size of that base, man. Yeah. Look at the size of that base.
I don't know.
And then
fool me once, fool me 3 times, fool me 5 times. Shame on me.
And then go to the next one there, so you can see there's that energy sector overlaid with the price of crude oil. Crude oil gets going here with that dollar. You're gonna get that breakout in energy. I came into last week already long one energy stock. I bought another energy stock and an option as well on it last week, and I fully plan on adding another one this week. I don't know about fully planned, but I'm looking. All
right, I'm probably like most people in that I am woefully underexposed to energy in my life and portfolio. But I've been fooled a couple times now, so I'll wait. You guys will beat me. Clearly, you've already beat me to the punch. That's fine. I will wait and see if we actually get a breakout here. But in the meantime, I just can't. I can't do it. So.
You know, energy represents 3% of the S&P 500. It represents 2% of the Dow.
3% is actually more than I would have thought.
That's 3% up from 2.
Okay, see? Okay, there we go. Now we're talking.
Up from 2, down from 30.
Well, yeah, 30 years ago.
No.
2008?
Yeah.
Oh. And probably 30 years ago as well. That's interesting. 30, and it was number 1, right, for a long time.
It was the largest.
Yeah.
So 1% represents less than 1% of the NASDAQ, 0.5% for the NASDAQ 100. 2% for the Dow, 3% for the S&P 500. Americans just don't own it.
Yeah.
And by the way, when you look at the short interest and you look across sectors, you know where you're going to find some of the most short interest in any industry group or sector: oil and gas, oil services, explorers and producers. People hate this stuff. Love it.
What is the utility of measuring short interest by industry group or sector? It's such an idiosyncratic data point. Like you get a random company that is doing goes up 400% and crazy short squeeze, and it's idiosyncratic. Like, what is the value in saying, oh, like this industry group?
So for me, it's thematic, right?
Like,
so when I see super high short interest in things like the Russell 2000, things like biotechnology, things like oil and gas services, things like Saudi Arabia ETF, super high short interest. For me, it's thematic. It's not like, oh, we're going to buy the OIH.
Right.
Like, no.
Right.
People hate this group. Maybe we should look at some of these oil services companies, Halliburton, Schlumberger, right? Like, let's take a look at some of these names and see if there's anything there, see if there's opportunities. That's how I look at it. I also, it helps me to not short these names. I'm not shorting biotechs. I'm long one biotech, but looking to maybe add to that position, right?
Yeah. And then, of course, I feel like this needs to be mentioned, but we've said this time and time again. JC says he likes energy. That does not mean he's going and buying XLE, right? Or maybe he'll buy options on it, but probably not. Probably he's just looking thematically and then digging deeper, looking for the strength within the strength. It's something that I've learned, actually, because prior to this whole thing, I would I would find an area that I liked. I would find an ETF that I liked, and I'd buy that, right? And I would stop there. I would stop at the industry group level, but I've learned to go a little bit deeper because there's more juice the further down you go into the individual names.
Listen,
and I got tired. I got tired of owning ETFs that would move like 4-5% a year. Like,
listen, you look at the ETF and then you look at the holdings, and then I rarely trade ETFs. Like I'm in the Bitcoin ETF, right? Because it's the Bitcoin ETF, right? That's different, right? Exactly.
Yeah.
I got to tell you, taking a step back, bringing it back to New Orleans. First of all, great town, New Orleans. People,
I've never been. It's one of the only big cities in America that I have not been to.
For you who's never been there, I've been there a million times.
Yeah.
For you who's never been there, like I would go to like a football game,
Yeah.
Sometimes they'll have like a big SEC matchup there. Obviously they have bowl games there. It's great town for a game. What's cool about New Orleans when it comes to sports? Not that we're there for a sporting event, but when it comes to sports, New Orleans is the only place where you stay, where you party, and where you go to the game is all like in the same area. You see what I mean? Like in Miami, it couldn't be further. Like the stadium's super far from South Beach, nowhere near there. It's a pain in the neck. New York City's a disaster. Like the stadium's not even in the same freaking state. You got to cross rivers and bridges and whatnot. Like
that's true.
New Orleans, everything is right there, man. The town was built to party. Number one. Number two, I was in Disney last year and we were in one of the monorail with some ladies from New Orleans, and they were scaring the crap out of my wife, telling my wife how dangerous it is and there's so much crime. Bullshit. I felt so safe. There's some shady characters walking around, but like they're not hurting anybody. I felt very safe. Just keep that in mind. Everybody was so nice. Like they're so nice down there. Like I was down in the Masters in Georgia. Like what was that, last month? I was in New Orleans. People down there are just very nice people. I'm totally into it. But the big standout, Spencer Israel, big standout is Riley's presentation. Riley's presentation was freaking awesome. Granted, we're long a lot of the names in that presentation. The crowd there was rooting for a lot of these things. We're talking space exploration, energy. Guys, and then Riley was nice enough to let us share his deck with everybody. So, Spencer, if you can drop the link to Riley's deck, that would be great. Guys, this was such a sick presentation. The names on this list, I just want to roll through a few of these just so you can get an idea, starting with Rolls Royce there, Spencer.
Yeah, give me 1 second. I'm just updating a link. And
you sent it to me yesterday.
No, I'm updating the link for people to get it when they enter their email. That's all. Yeah. Okay. Okay, cool. We are good. There we go. That is done.
Hey guys, click the link, download it. It's free. Great freaking deck. Like, seriously, there's going to be some names that you recognize. There's going to be some names that you recognize that you didn't realize was kind of like in this category. And then there's some names that you've never heard of, and you're like, holy shit, look at this thing, right? So trust me, download that report. Hell of a job, Riley. Seriously, I don't know if Riley's listening out there in internet land, but fantastic job, Riley. Fantastic. Let's throw up a few charts so the folks can get some idea as to types of names that Riley was talking about here. Rolls-Royce. Rolls-Royce doesn't even own their car manufacturing. Did you know that? I didn't know that.
Yes, we've
talked about it, but I didn't know they didn't own it at all. Like BMW owns it, I guess.
I think I knew that. Yeah.
Throw up slide 11 there, Spencer.
Yeah. All
right, so there's Rolls-Royce. Look at that beast, man. Woo! Keep going. Look at D-Wave. This is quantum stock, right? Look at Roblox. This is, video game, funny money.
Wait. Zoom out on this one. Come on.
What?
The Roblox chart is, I guess it supposedly looks good there, but I guess it's not a bad base, but yeah, all right.
I mean, the stock has tripled.
Yeah, all right.
Lows. Are you not entertained?
Fine.
Is that not enough for you?
Yeah. Well,
weren't you just the one complaining about the ETFs you own don't move enough?
Yeah, that's true.
This thing's tripled off the lows.
I just remember this one.
Things up 60% in 6 weeks. Is that not enough? It's averaging 10% a week.
Right,
Are you not entertained?
I retract my statement. It's just what's funny is because like a whole bunch of those Kathy Wood type of names, a whole bunch of them came back. Right in 2023, I guess, right in 2023, 24, and a whole bunch of them didn't, right? And this was one of the ones that didn't really, but I guess I missed it because now it is. So
no question, it's making new multi-year highs. It's up 4x from the 2022 lows. It's up 60% in the last 6 weeks. Lows last month. I mean, this thing's moving. So again, this is one of the reasons. What you just said, Spencer, be like, oh, I didn't realize this was doing that. It's a good example as to why I'm telling everybody, download this deck. It's got great charts, right? You're like a prime example. Check out Duolingo.
I didn't realize.
This is that language company. Looks great. Look at Netflix, also using a lot of AI. And then BYD, this is the Tesla of China, making new all-time highs. So if the Tesla of China is making new all-time highs, do you think the Tesla of America, the OG Tesla, is not going to make new all-time highs?
Wait. I'm sorry. No.
Spencer, do you think that it is hyperbole? And I'm exaggerating a little bit when I say that the risk in Tesla is that it becomes the largest company in the world and you don't own it because you don't like that the bromance that the CEO has with the president. Like, not you specifically, but the general you. Like,
I don't know.
That's the risk.
I don't know how much that matters anymore. He clearly has taken a step back. I haven't heard Elon Musk's name mentioned in the zeitgeist. I mean, I guess I still hear it, but it's like the mentions are in a huge drawdown, right? He was getting every day it was more Musk shit like a couple months ago. And I don't know where he's been, but clearly he's not hanging out at the White House like he used to be, or if he is, he's being quiet about it. Because has anyone seen him? Has anyone seen him in the last few weeks? It seems like he went kind of back to work, which is a good thing, by the way. So I don't know how much the whole Trump Musk thing matters anymore. But the risk to this one has always been there's been two risks. The risk for the longs has been that the stock is valued, the company is valued for future growth that hasn't happened yet. It is valued not for the cars that it sells. It is valued for robots in the future and AI, right? And then the risk for the shorts has been you can get your face ripped off, right? So it's the same old story with this thing, right? Nothing really ever changes with Tesla. Is the growth ever going to be there? Maybe. Does it matter? Not today, right? So that's sort of where my head
For
is at.
Tesla, you can take that chart off. For Tesla, guys, make sure to drop the link, Spencer. Guys, make sure to check out Riley's Godspeed deck of all the charts. These are just a few of them, but there's some great ones. Definitely check that out. Is it fair? Here's how I think about it, Spencer. A CEO's job. CEO has one job, right? CEO has a lot of jobs.
They have more than one job.
It has more than one job, but it's one goal, one responsibility. And that is to increase shareholder value, right? I understand that some communists in this country don't like to hear that, right? Oh, the CEO's there to serve employees. Fuck their employees. The CEO is not there for the employees. The CEO is there for the shareholders. The CEO doesn't work for the employees. The employees work for the CEO. The CEO works for the board. The board tells the CEO what to do. The board represents the shareholders. The CEO's not here to make employees happy and feel all warm and fuzzy. No. The CEO's job is to increase shareholder value. Period. Period.
It is one of his jobs.
No. It is the job. Is to increase shareholder value. Now, some people are like, oh, JC, they have to make employees happy and then increase revenues. Yes, those are ways that perhaps could help the CEO do their job to increase shareholder value. There's a lot of different things like that the CEO can do to increase shareholder value. But at the end of the day, any of those things are being done so that the CEO can increase shareholder value, right? That's the job.
Yeah, it's just sometimes it's not a straight line, right? I mean,
it never is.
Right. So, things that like Jeff Bezos is and Amazon is like the GOAT example of that, right? The decisions that they were making, post.com bubble they were making long-term decisions, right? The stock was getting killed. They didn't really care, right? They weren't even they weren't even profitable, but they didn't care, right? They could have been profitable if they wanted to. They weren't for a very long time, but because
it's not it's not the CEO's job to be profitable. It's the CEO's job to increase shareholder value. See the difference?
Right. And Bezos has talked about this, like how the underlying metrics of the business were all getting better and the stock was getting hammered. And like he was like, that's okay, because I know the business is getting better. So it's not always a one-to-one relationship between what's.
So then let me ask you this. Yeah. So just to remind everybody, before this multi-year consolidation in Tesla, the shares of Tesla went from $80 billion in market cap to 1.3 trillion, right? Yeah, so Elon Musk increased shareholder value faster than any CEO in world history, right? So the CEO's job is to increase shareholder value, and Elon Musk increased shareholder value faster than anyone ever before him.
Yeah.
Doesn't that make Elon Musk the greatest CEO ever?
The title, that title is always changing. Wasn't Jack Welch the greatest CEO of the 20th century, and until his empire kind of came down like a house of cards?
I wouldn't say. I mean, I think journalists said that, but I don't think that's. I mean, the math doesn't play out.
He was definitely on a few magazines. It's not neither here nor there.
Oh, well, as long as he was on the cover of a magazine, then it must be good.
No, it's not just that. I mean, he was like GE was like a business school example of what to do, right? Of how to run a business. In any case, doesn't matter. Is Elon Musk the greatest CEO ever because he made the most shareholder value? That's one way you can. That's one way you can measure it. But the market
seems like a pretty good way to measure it.
But the market never ends, so that's probably not a good way to measure it, because that number is going to always change.
Then hold on. So then all right.
He's also
80 billion to 1.3 trillion in less than 18 months or so, whatever the 16 months, whatever it was.
Yeah, but I guess by that you could say he also lost the most too.
Hold on. And then since then, the price of the stock has consolidated and digested those gains in a very healthy, well-deserved digestion of gains after increasing shareholder value by so much. So the way I look at it is you had that big thrust, you had a well-deserved multi-year consolidation, and if this sucker breaks out, right? If this sucker breaks out, just like BYDDY is already doing, the Tesla of China is already breaking out. Think about it. I think the squeeze, obviously this thing's up 50% since the tampon guy was dancing. Remember how he was getting his rocks off because like he's broke, but he has time to, watch the prices of stocks fall, right? Remember that? So Tesla's already up 50% since then. So in case you guys were wondering whether I was just trying to be an asshole or whether we're trying to make money, I'm literally showing you guys how this works, right? We're up 50%. Our call options doubled in like 10 hours, right? Like we're here to make money. We're not here. Like, I don't care that he's like a communist. Like, he could be Republican, or he could be socialist, or he could be a Nazi.
Why
like,
not?
it's not what it's about.
Why not acknowledge that Tesla fell 50%, and then therefore Elon destroyed whatever it was, $750 billion in shareholder value, right?
Yeah. We're acknowledging that. It consolidated for 3 years. Well deserved, after increasing shareholder value faster than anyone in history. So my point is, you had the move, you had the consolidation. Now, if this thing breaks out and resolves higher, shouldn't we expect another 3,000% move to the upside?
You say consolidation, someone say crash. That stock crashed, man.
Yeah, every high growth stock crashed off the highs in 2021, early 22. Remember?
No, I'm talking about, no. I'm talking about this year. I'm talking about the last few months.
After the last few months,
the all-time high for Tesla was
right.
in December.
In December, all-time highs.
Right, $1.5 trillion.
Yeah.
Right, and it was at 714 on April 8th.
That's right.
Okay, so it fell by half in basically a quarter.
Yeah, and then it rallied 50% from there. Yeah, so this is what is referred to, Spencer, as a high beta stock.
Yeah.
Right, and you're seeing it.
That's why I'm saying, like, measuring someone's worth or value from the shareholder value that they've created is not great, because it's always going to be a moving target. Like, okay, so he was the best ever as of December, but then he was also the worst ever 3 months later, right? You hear what I'm saying? Right? I know you get what I'm saying. I totally get what you're saying.
That's like the Kathy Wood.
We'll see, because it never...
Like the Kathy Wood. She lost more money for investors than any ETF manager ever. But she also raised so much money that she had more to lose, right? So, like, yeah, I get it.
Yes.
So anyway, my point is...
Yeah, my bigger
point is, when you think about the upside potential, I think that the squeeze from the tampon guy, I think, can continue, because I think that there's a large segment of the population that doesn't like Tesla or Elon Musk because of the bromance that he's having with the president. And I think the risk is not owning the stock because of that, and it becomes the most valuable company in the world. I think that's the risk.
I think if you're like staring at Tesla and being like, I don't understand why it's valued so much, dude, it's been that way for years. Okay, if you are still asking that question, like, just stop, because the company, the stock has never been valued based on what it is doing today, ever. So yeah, some of the valuations make the ratios make no sense, but that's the way it has always been. So don't value it like a traditional company, because it's not.
No, imagine being one of these sell-side guys. First of all, imagine still being a sell-side analyst. Number one, how terrible that must be. But number two, imagine being a sell-side analyst trying to put a valuation on Tesla. Like, just you want to think about, like, you want to chuckle to yourself. Just think about what that guy's job is, to wake up in the morning and be like, I need to put a valuation on this company. Like, just imagine how hilarious that is. Can we throw up? I have a couple of interesting charts here. Slide 4, 5, 6. These are good.
Okay.
So I don't know if you caught this. We talked about it at the top of the show, that the All Country World Index just closed on Friday, highest weekly close in history for the All Country World Index. As a reminder, 2/3 of this index is America. 2/3, which is probably about right. Right? Isn't that about right, Spencer? 63% of this index?
I couldn't tell you what about right would be. I don't know what the U.S. is compared to the world in terms of the size of our markets.
It's about 60%, 55, 60%. Yeah, right. I mean, U.S. is like 55, 60 trillion. Globally, we're looking at about 125 trillion. So yeah, that's probably pretty accurate.
So stocks are going up everywhere. We know this.
But in America too. That's my point.
Well,
the index with 63% US is making new all-time highs, right? So it's not like, oh my God, the United States is crashing, and then, money's flowing into Germany and JC. Nobody knows where Poland is, bro. I don't know why you're always talking about Poland. Like, that's what they tell me. And I'm showing you literally the index that's global, but it's 60% America, is making new all-time highs, right? Throw up the EFA, because this is a big one. right? So like in the institutional world, when you talk to portfolio managers, hedge funds, mutual fund managers, financial advisors for sure.
This is the IFA. This is the S&P of the world.
This is the of developed world.
Okay, fine.
This is the developed world. So these are developed markets outside of North America. So basically, a lot of Europe, a lot of Japan. Basically, right? Europe, Japan, UK, little Australia sprinkled in there. But that's what you got, right? Netherlands, Switzerland, Germany, France, right? Little Italy, little Spain, little how you doing there, right? Highest level since the Great Financial Crisis. Throw up the next one.
Yeah.
And then we'll finish with this one globally here. German DAX, new all-time highs. European Bank ETF, new all-time highs. Just very impressive. Just very impressive from a risk-on standpoint. Huge rippers off the lows. Pessimism, bigger picture. Granted, short-term sentiment, has bounced back a little, obviously, with the NASDAQ up 25% over the last 6 weeks. Not bad.
Wait. I'm going to go back for a second. Hold on. Actually, that's a good question, Jerry. Why is IFA 23? I didn't realize that. 23% Spain?
No. That's a brain fart.
Oh, okay.
Yeah. No, that
should be 3%.
Typo.
Oh, typo. Okay.
Hey, that's
good catch,
There's
Jerry.
Zero chance Spain is 20%.
Jerry always paying attention.
Jerry, good call there, Jerry. Calling me out on my bullshit, right? Look at that. Look at JC. Come on, JC. Get your shit together.
Yep.
You got me. You caught me. My bad. My fault. Spain, you could be, I bet Spain is definitely not 23% of the global markets. Yep.
Okay.
Yeah.
Great catch there.
What can you do?
All right, look. All right. Okay. Anyway, bottom line, stocks going up. We've known this. And now they're going up in America, and we can all be happy in America, right? Because Americans, it doesn't make us feel great if you say, yeah, but the rest of the world's going up. But if we're not going up, we don't care. Yep. So now we can be happy. We can be happy with the rest of the world.
This was a big topic of conversation at the accelerator. Stephen Weitzel came on, walked us through his white paper, Pavlov's new dog. I thought it was so good. He
talked about that like a year ago.
Yeah.
I mean, he talked about doing it. He didn't talk about
he actually finished the white paper. We're going to have a link for you guys soon. He's putting it up on the site, and we'll drop it for you so you guys can read it. But essentially, a lot of investors, for those of you who might not remember Pavlov's experiment, Pavlov had a dog, and then he'd ring the bell, and then he'd feed the dog. And then the next day he'd ring the bell, and then he'd feed the dog. So then the dog, every time the Pavlov rang the bell, the dog started salivating because the dog knew that they were going to get food. And then for a long time after that, the Pavlov would ring the bell and then not give the dog food, and the dog would continue to salivate, right? So that you trained essentially the dog that every time that bell rung, they were going to get food, even if they weren't, and the dog still was salivating. So Pavlov's new dog is really this 60-40 portfolio, right? Where investors have just been trained to believe that when the stock market pulls back, the bond market catches a bid, helps balance that out, right? So that giving you that diversification. Everything changed in 22. In 22, the stock market was getting clobbered. Bonds were down even more. So a 60-40 portfolio turned into a 100 portfolio is really
it's such a brutal year because there was nowhere to hide. I mean, cash is where you can hide.
Energy was ripping that year. And then energy. And then also the market bottomed in early 20. Well, it was before that, but the market bottomed in mid 22, right?
I thought it was like August or September. No, do I have that?
The list of new lows. The list of new lows.
That's right. You and I define market very differently.
So in the first half of the year, when a lot of things were selling off stocks and bonds, energy was absolutely ripping. The market bottomed in June of 22 and started ripping from there. Almost everything was working in the back half of 22, except for technology and high growth. And then that rotation came at the beginning of 23. And there were still people fighting all of 23. They're like, oh, it's a bear market rally, JC. Is it still a bear market rally? Like those idiots that were telling you it was a bear market rally in 23, they never came out later and said, oh, as it turns out, it was just a bull market, not a bear market rally. one of my favorite oxymorons out there is bear market rally.
October of 22 is when the indexes bottomed, but
well, the S&P 500, I think the Nasdaq kept making new lows.
You know what? Let's look. No, it didn't.
Yeah, the Nasdaq ultimately made its low at the end of December. Yeah, the Nasdaq finally bottomed on December the 28th.
Not the chart that I'm seeing.
The Nasdaq 100, literally the closing low was on
the
December
closing low. Oh, okay.
Oh, yeah. I don't know if you realize this, but closing prices are the most important.
I was just looking at the candles. Okay. The closing low. Yeah. Yeah, okay.
Gopher says I'm the only one that says June. Yeah, I was the only one saying June then.
You know what?
Which was really helpful.
Credit to JC, because I was in the room, whoever said that, Topher, at the CMT Association annual symposium. This was in the spring of 23. JC said, show of hands, who in this room is bullish? And nobody raised their hands. And then he said, who's bearish? And everybody, me too, raised their hands, right? Because how could you not be bearish after a year that we had just had? He's like, well, I'm buying stocks, and here's why. And he's like, actually, the market bottomed 6 months ago. And then we all know what happened 2023, 2024. So,
dude, I remember in Topher, maybe you don't remember, but I remember in mid-October being, I was on Fox, I was being interviewed by Maria Bartiromo, and I was telling her that we're in a raging bull market, and she looked at me like I was crazy, dude. Wow. She looked at me like they even took her face from TV and they made it a meme. She looked at me like I was crazy when I was like, oh yeah, we're in a bull market. Well,
that's because it was crazy to say, JC.
Well, some of us take the time to count, and some of us don't.
All right.
You know, so listen, and this is a good point. It's something I was telling. Who was I talking to over the weekend? I think I was talking to Herb Greenberg, actually. Yeah, I was talking to Herb Greenberg. I had a lovely conversation with Herb on Saturday.
Great.
And a lovely man, Herb Greenberg. And one of the things I was telling him is that, you know, all these fucking guys, they're always like trying to like build some algorithm, like to like quantify breadth, and they're like dividing two arbitrary numbers, like these highs, and we're going to divide it by these lows, and then like they think that that's market breadth. They spend all their time trying to cheat the system and find some hack. And in case you're wondering, that's why they're always wrong, because instead of actually doing the work, they're always trying to figure out a way to not have to do the work, right? And that's why they're always wrong, and that's why they're broke. Guys, I'm telling you from the bottom of my heart, I don't have to do this. I'm telling you guys, because if you're listening out there and I can add some value and you're wondering why this crazy Cuban is yelling at you, if you're wondering why you're here, it's this. Trust me. Just do the work. Do the work. Just put on some music, turn off the stupid television. The fact that people still watch this crap is ridiculous. Watch it when I'm on, or when some of our friends are on. Watch it then, and you can watch the clips on Twitter anyway. So you don't have to sit there like some clown just watching basic cable television all day. You'll see it on Twitter. If it's worth watching, you'll see it on Twitter. But guys, I'm telling you, from the bottom of my heart, if you never listen to anything ever again, listen to this. Just put on some music and just go through the charts. Which charts? All of them. All of them. Start with the Dow 30, go to the S&P 500, every sector, every commodity, every global index, all the Forex markets, just go through it. You have to do the work. You could be like these assholes that spend all their time trying to build some algorithm so that they don't have to do the work, or you could just do the work. Like you can read books about like lifting weights. You could like read books about running marathons, or you could just lift the fucking weights and just go for a run. Like you don't have to like figure out some hack. Just do the work. I mean, I can't emphasize this enough. Do the work. I'm telling you. You want to know the hack? That's the hack. Actually doing the work. It's not that hard. It really is lovely. Put on some good music and just get after it.
There is no substitute for screen time, right? You gotta put in the time in front of the screen.
Dude, Richard, great question, Richard. I'm so happy that you brought this up.
Oh boy.
Because this came up in the Portfolio Accelerator. It's been coming up for 20 years.
Yeah.
Silly question. What's your view on dividend adjusted charts versus unadjusted charts? Many charts have reached above all-time highs when looking at adjusted charts. All right. This is something that
I'm starting the clock. Here we go.
This is something that I've been debating for many, many, many years. This is something that I've asked all of the greatest technicians that ever did it. I've asked them all this question. I've even sent emails polling a list of like 50 of the top technicians in the world. And here's the answer. The answer is some people are going to tell you to adjust it, and some people are telling you price only. I would say over 90% of the greatest technicians that ever did it that I have asked, it's probably closer to 95%, have said price only. And then here's the answer. If you're analyzing supply and demand of financial assets, then you want to look at price only. As stupid humans with lizard brains, we remember what we paid for it, not how much money we made, right? So there's a place for total return charts. If you're looking for total return, like if you want to know how much SPY has returned this year, it's returned 19.68% in the last 6 weeks. And then if you look at the actual S&P 500, it's going to be lower than that because it's just the price. So the S&P 500 over the last 6 weeks is up 19.58%. SPY is up 19.68%. So if you're looking for total return, then you can go ahead and include those dividends. If you're analyzing supply and demand, then you want to use price only, right? I know that there's some websites, there's some shitty websites out there that look exactly like they did 20 years ago, and they still look exactly the same, and they automatically adjust for dividends because the people who build them are not actual market participants. They're just coders, so they actually don't know the difference, and you'll see that. But as somebody who's done this every single day for multiple decades, I could tell you that you want to use the software for your charting built by people who actually do this. And there are some out there where they've never traded a stock in their life. They're just stuck in some room coding, and there's a reason why they do it wrong.
So to summarize all that up, it's remember why you're even looking at the chart in the first place.
Yes.
Right? Why are you even looking at the chart?
Yes.
You're looking at the chart to find the buyers versus the sellers, right? And that's why you're doing it. If you're looking at the chart to calculate your total return, then yes, definitely you should include dividends. But okay. Jason Purse, are you in the house? We got Jason Purse here. Jason and I did a couple shows last week while you were out, JC. We had a good time. And he's back.
Who do you think had a better time, you guys or me?
Probably not us, Jason, right? Probably. I mean, we were both home. How much fun can you have at home versus New Orleans, right? Anyway, Jason also brought some recess with him. So let's talk to Mr. Purse and see what charts he has going on, and then we'll get out of here.
Oh, Mr. Purse.
Hey, what's up, guys? Good to see you, JC. Trip looked great. You're right. You guys did have a much better time than us. It was a lot of fun on here, though. Spencer and I had a lot of fun last week covering, just doing the morning show a couple days. Man, it was
talking to Larry.
Yeah, Larry running Subu Trade.
Subu Trades. It was good.
I was Subu Trade. I've never spoken to him. I like his charts.
Yeah, so I met him a while ago. Good guy, great person, like really knowledgeable. His parents were traders, so he's kind of from a similar background to me. So we kind of, really get along very well. Like I've always liked the guy, great charts. So he'll come on at some point with you, I'm sure. Like
I would love that. I've never met the guy, but I really like the way he looks at markets. So I'm pretty sure we're gonna get along just fine.
He codes his own charts, so I'm he's after my own heart. Like he builds his own charts, he builds his own he's really a phenomenal guy. Great.
JC, imagine your parents are traders and you come home from school and they like teach you how to trade when you're like a kid. Like imagine that.
His parents are traders?
Yeah.
That's funny.
My great uncle was a trader, so like we kind of got bonded over like just learning all these old school techniques too is something that we both did, which is like writing point and figure charts, like drawing out cycle charts, all this stuff that like kids don't do these days. We probably both did.
Jason, I got to tell you, you were missed.
Oh, dude, I was missing.
I got to tell you, Spencer, you weren't missed that much, but Jason, you were missed. You know why? So we have a new member of Portfolio Accelerator, Brad, and he's like, we're talking to him. I'm like, so what'd you think? Your first time here. He's like, I really could have used some more intermarket analysis. And I was like, I was like, not for nothing. I agree.
Yeah.
And if Jason was here, we would have had a lot more intermarket analysis. So I'm totally with you, Brad. So yeah, you were like
that's
legitimately documented missed.
That's funny because last time it was like, hey, do you guys want to go back to the FOMO trades? You know, like we kind of had to do that. But that's great to hear somebody, because I mean, you and me, JC, we're both very similar in that sense. Like, I want to start with the intermarket and understand what's going on in the big picture. Then I can get to the micro. So like, that's why I always start there. But no, I was missing out. I put the charts together for it, and I was like, oh man, I have such a cool presentation that I can't do. But I'll be at the next one, I'm sure. And I'll see everybody then. But I was very upset, very sad. But it was nice to hear the like you said, it was the rant this morning on charts that you just did right before I got on was amazing, about adjusted charts compared to regular charts. Man, it was good.
I'm still having, for the record, just because you think that you should adjust your dividends adjust your charts for dividends doesn't make you dumb.
Yeah,
it makes you wrong, but not dumb.
Yes.
I personally have very, very smart friends, guys that are way smarter than me, who will tell you, who will die on that hill that you want to go full boat dividend adjusted. One of those guys is Rob Koifman. He's one of those, and he's smart as shit. Mm-hmm. There's a few of them out there. I'm not gonna go down the list, but there's a few of them out there, and they're wrong. So.
We're traders. We're not sitting there holding these things for 20 years. Like we're not trying to collect the dividend forever. We're traders. So I like the aspect that you gave there. It was good.
I saw a list the other day of all of the stocks that pay monthly dividends. It's more than you'd think.
Oh yeah, there's a lot of them.
There's a lot.
But once again, there's an interesting study with Meb Faber did years ago, which is the fact that if you buy dividend stocks compared to stocks that don't have dividends, you actually lose more money in the dividend stocks than buying the ones that don't have dividends, because usually they have dividends for a reason.
What, it's not excess cash?
Yes.
But if you're a company that pays dividends, like all you're telling your investors is that you can't figure out how to use that cash, and that your investors could do better with that money than you can.
Yeah, exactly.
That's such a great message.
Exactly.
That's
Warren Buffett is that Warren Buffett's never paid a dividend. You know why Warren Buffett's never paid a dividend? Because he knows for a fact that he could do a hell of a lot better with that money than you can. Right.
I always like it was the Jim Rogers quote where he talks about like when he first started trading, and he had this, I think he was married, and he talks about his wife at the time, and she's like, I want to buy this couch. And he's like, this couch is $4,000. Do you know what I can do with $4,000? And he just continued down that road you want to buy a new house? You know what I can do with $100,000, and just continue to do that over and over again.
I had that same conversation with my wife. We were looking at some houses up in the mountains, and we walk out of a house that I didn't like. And she's like, let's put an offer right now. Like the house. Why would we put an offer? And then, because it's not that expensive. I'm like, yes, that is true. It's not that expensive. But do you know what we could do with that money?
Yep.
Think about the opportunity cost. And
yes.
Like, do you know what opportunity cost is? She's like, yeah, I'm not dumb. I'm like, okay. That the opportunity cost is, right? I'm like, I don't even like the goddamn house.
Oh, man, that's funny.
No,
Jason, you sent over a couple charts. Let's talk about them, and then we'll get out of here.
Oh man, I'm cracking up. Okay, anyways, but yeah, so looking at gold, Sam and I have been talking about these levels over and over again. Now we're kind of hitting these levels, but once again, like the one thing that we just want to highlight here on the gold rush is that we keep hitting these levels, but we just keep consolidating around these levels and breaking out higher. So the question is, we think we're going to break out higher at some point? And the answer is very simple. One, if we get over that level, absolutely. But we're still in an uptrend in gold, even with this pullback, even with a little bit of volatility. Like, this is not a downtrend. This is not something that you should fade right now. Everybody keeps asking me about shorting gold. I'm like, are you crazy? It's like stepping in front of a train at this point. Like,
I got some smart folks that are shorting gold, actually.
Yeah. I mean, it's just like stepping in front of a train. Why not? You just get ran over and drag 1,000 miles. But why don't you just?
if you get that dollar bounce, you don't think gold's going to get hurt a little bit?
Sure. But once again, is there more money to be made on the upside than the downside? And the
I am not shorting gold here, for the record.
I know that. But
in fact, you know what I'm doing here? What I'm specifically looking for is, in this consolidation, which gold mining stocks are holding up the best. I'm looking for and not just like today, like over the last few weeks, I've been saying that. right?
Yes, and that's how you got to do it. This is what you do in a market. If you have a pullback in the stock market, you look for the strongest sectors and the strongest stocks inside of those sectors. Now we have a pullback in a commodity, which means you look at the strongest stocks and what miners are actually holding up best, just like JC said. So if we find those are going to be the ones that are going to lead when gold starts to move higher. It is in a very solid uptrend. This is just making higher highs and higher lows. Everybody in the world is going to say it's extended here. I'm just going to tell you to go back and look at the past few cycles before you say that. And if you look at the past few cycles, you'll say that this thing could move a lot higher, and there's a lot of demand for it at the moment. And there's, it continues to have good fundamentals, good monetary policy to back it up that it likes. Uncertainty in the world, which we know stocks hate, but gold loves. And so I think that gold will probably go higher in the end. We could run through the next chart too, Spencer. I think 18. So this one, Sam sent me this morning, and I was looking at it and going, wow, this is quite interesting. So basically, it's a gold versus a 10-year yield. And so if we're looking at gold versus a 10-year yield, we're seeing that it's starting to get out of this basing pattern and possibly looking to move higher against a 10-year yield. This is a tough one because, one, gold has moved higher against a 10-year yield, even though yields have continued to either consolidate or move higher. But now, do we think that gold is going to just continue to move higher, or do we think that yields are going to go lower? And that's the big question here. Yields consolidating. I think the big surprise here for yields, even though it's not that far from highs, is that it just starts to break out and just doesn't look back. I think that's the big risk that nobody's thinking about right now. Everybody's saying yields have to go down because of the Fed and all these things, and it's very possible. But I do think that you got to be open to that upside in the 10-year yield at the moment, and thinking that that could go a little bit higher and inflation can go a little bit higher, especially into the summer and the end of the year.
I don't know how I feel about this chart.
A little too cute?
I mean, really? We're putting the U.S. 10-year yield as the denominator?
I like it. I like it.
Eh. I mean, I get it. Eh.
It's something when you look at the intermarket analysis and you look at yields. I mean, what would be the difference? If I put TLT and GLD together, people would be like, yeah, I get it. But I put the yield on there and people go, I don't know. And really,
I'm one of those people. What do you mean, you people?
You people. But no, for real, it's literally just the same chart kind of flipped. And it kind of just gives a little bit of a basing pattern showing you what's kind of happening in yields and where gold could possibly head. So I like it a little bit better than the TLT one at the moment. And also it's the actual product. So I'm actually looking at the yield. I'm actually looking at gold. I like it a little bit better than looking at the ETFs. So go to the next one, Spencer. So JC, I know you're looking at this stuff like crazy too right now. We're looking at Deere, and so basically DE has been just breaking out and kind of just shucking off the downtrend in the market, making new highs. But the thing I think a lot of people need to look at right now is that industrial stocks and agricultural stocks are finally starting to move. This is something that's kind of significant because it's kind of saying we're kind of changing it into a different regime. And you kind of want to look at these different areas. I mean, look at what's up the most this year. We're looking at agricultural. I think it's the MOO ETF, which, hasn't been on anybody's radar since 2020, 2021. And then that's up 11% on the year. And then if we look at gold miners, we got these things up 40 to 50% on the year. They're fluctuating around. I think they're under 40 right now in GDX, but we're still in this nice uptrend in the gold miners. Agricultural stocks look good. Industrials look great. I just like the idea here of buying industrials.
Well, yeah, let me just stop you right there. Global industrials are already making new all-time highs. U.S. industrials are an eyelash from new all-time highs. Industrials closest to new all-time highs of all of the S&P sectors. Deere. I don't think Deere has that. Well, industrials in general are super diversified. The largest component is a 5% weighting, which compared to other sectors is like nothing. When you look at Amazon, such a huge weighting of discretionary, or you look at financials have huge weightings, staples have huge weightings, communications have huge weightings. Oh, here we go. Deere's 2.9%, barely cracking the top 10 of industrials.
Yeah, I mean, it's not something that I'm saying, hey, let's go, buy the XLI. I am saying, like, look at the whole. I mean, you could, but look at the whole sector. Look at industrials as a whole, like you're talking about. They're looking great, whether we're looking at global or U.S. industrials. Also, look inside of there, and you'll see there's a lot of gems. Deere being one of them. And I want to really the ones I want to own right now are the ones that are going to be involved in agricultural production. I think that we definitely have a run that's probably going to happen in the grains, probably to end this year or possibly into next year. And so these usually front run that, and not to mention the industrials look great. So I'm just looking at strength inside of strength, and this one's very strong.
Yeah. Riley's including that. It's in the deck. Spencer, if you want to just drop that one more time in case you missed it earlier in the show. Riley's presentation last week may have been the best. You know who else was really good? It was Rick.
Rick killed it.
Dude, Rick brought down the house, dude.
Yeah.
Rick brought down the house.
That's my boy, dude. He's a killer. A lot of people just don't know how
Slick
smart
Rick shows up on the first night with like a tank top, sun's out, guns out, like ready to go. He looked like Freddie Mercury. Dude, it's so funny. It was so good.
He's a mixture between Scarface and Freddie Mercury. That's basically how I think of Rick.
That's right.
Yeah,
that's right.
Love the kid. Man. One more chart, Spencer, and just it's a special for JC.
Whoa!
So shout out to the Zloty, of course.
Shout out Poland, man.
Yep. Shout out Poland. We're looking at their GDP growth being around 4% is the projected rate this year. The stock market is up 45% in the ETF at the moment. So I mean, we're having a massive move in international stocks at the moment, and a lot of people just aren't really thinking about that. We've been talking about it all year long. We've been talking about it since last year. But
we do the work, Jason.
We do the work.
We're not these assholes that just divide two arbitrary numbers by each other and call it market breath. We actually do the work.
But finding these things, and that's the thing. Like JC is very similar to me in the sense, like I don't care if I gotta buy, whatever. I'm gonna buy some random obscure country in the middle of nowhere that nobody's ever heard of, that everybody's afraid of, but it's in an uptrend. I'm still gonna buy it. Because the idea here for me, I've always been a trader, and I've traded for funds over the years, and they don't really care as long as they're making money. The idea here is to make money, and I want everybody out there to make money. So the idea is, hey, we don't care if we're in international stocks, we're in commodities, we're in US stocks. We're just trying to make money and protect your portfolios because we care about our clients. So doing that, we'll just invest anywhere. And for me, this has been a great trade all year long that a lot of people still aren't looking at. The international trade is still doing very well. It's holding up better than a lot of the sectors, and a lot of people still aren't looking at that. Do you have any thoughts on why that is, JC? Why the bias is so strong?
The international?
Yep. Why the bias is so strong still?
Two things. First of all, humans are very strong beings, a lot of grit in humans, but the lizard brains, that's the problem, right? So, humans have a hard time overcoming recency bias, right? So when you have 15 years of outperformance in America, you forget that in most bull markets throughout history, America underperforms, right? So our lizard brains, not yours or mine or Spencer's, but the you people, forget that the U.S. tends to underperform in a lot of bull markets. They're perfectly normal. So actually what we just saw is the outlier. That's number one. Number two is the home country bias. Oh, America's the greatest place in the world. Why would we need to invest overseas? We live in America. So you got the home country bias, you got the recency bias, the lizard brains, right? You got all of those things. And so it's going to take a long time, I think, to train investors. Because I remember a time early in my career where oh my God, China's the next best thing. You got to be in Europe. I mean, Latin America, Brazil was hot. Remember that?
2000s, man. Yeah. 2000s. It was all about that.
The kids these days, they don't know.
Yeah. And there, the other thing that's changed too is we've always had our home country bias in the United States. But now it's like a global bias. If you talk to people in India, they want to invest in the United States. All these people I used to talk to all over the world, they traded Forex like crazy, or they traded anything but the U.S. market. Now they all just kind of trade the U.S. market. They want to be in U.S. stocks. And also it's just because we've been winning for so long. But that doesn't last forever. Just look at history. Like JC said, there's been a ton of bull markets where these things have outperformed like crazy. And it's just happening again. So just continue. To me, it's like continue to look for opportunities in that area. I don't know when the pullbacks exactly are going to happen. I don't know how overdone some of these are. But man, it's looking good. I'd continue to buy dips. If you're a dip buyer, I'd continue to buy breakouts if you're a person like me. And just continue to get into these things as the trades come. That's all I got.
No, that's
Awesome.
good. And joking aside, Spencer, you were very missed last week.
I appreciate it.
Like when we needed someone to close the door because it was too loud out there, we could have used you to close the door.
I know. I'm sure.
Some of the AV we had an issue. We could have used your help there fixing that. No, Spencer brings a very an interesting dynamic to the conversation. Spencer represents the people, right? Spencer's out there fighting the good fight, calling bullshit when he sees it, right? Yep. And we appreciate that from you, Spencer.
Or cheerleading, home country bias. Who doesn't love that?
See what I mean?
What's wrong with a little or a lot of home country?
Honestly,
there's a lot wrong with it. There's a lot.
Our events sometimes without Spencer steering us the right direction, we'd be
bringing us back.
Well, the common joke about these things is like people ask for an agenda, so we make an agenda of topics, a schedule for not just the weekend, but also for the days of meetings and the order of operations and who goes when. And then within the first hour, it just goes out the window. And then it's like, things, let's do that now. Let's do this later. Move it to tomorrow. It's the whole thing.
Well, I mean, that's what happens though.
Yeah, that's what happens. All right, let's do recess and get out of here.
Do it.
All right.
All right, Jason, you first.
Spencer said I had something for recess. I was like, I
thought you did.
I don't.
You said you had a good story.
Oh, that was on. I said that to Sam for the Gold Rush show today. But I can.
Oh, my bad. All right. I don't want to.
So Sam, no, that's fine. That's fine because it doesn't matter. But so Sam was talking about a tornado in Kansas.
Yeah.
And so I was like, oh, I have a great tornado in Kansas story, Sam. So basically, we were driving back doing shows in Kansas. We were in Iowa. We went to Kansas after that. We're driving home and we're on the highway. And all of a sudden there's sirens. We see a tornado like really far away. We get off the highway. We go, okay, well, we got to find shelter or something. So we get off the highway. I try to go into a Taco Bell. It's closed. I go across the street. There was a Speedway. I knock on the door. It's closed, but there's people in there and they're all like staring at me like I'm an idiot. And I start banging on the door. Like, we got to all get in here. And I'm like, it's me and my whole team. And I'm like, okay, like we got to get in here or we're probably going to die. And they're like, actually, there's a rule in Kansas that if there's a tornado, we just lock our doors and nobody can come in or go out. And I was like, what the hell is this? So like, we just get on the highway or start driving and we just see the tornado and it's like right next to us. And we're just like, this is so messed up. We're going to die. And finally, like we see a state trooper that's pulled over under a bridge and he starts waving me over and he's like, get over here. So we just hung out under this bridge with this statey for a while. Nice. And we didn't die. So thank God, nice. Except for one of the riders, because we're all crazy, started running at the tornado to try to take pictures of it and hang out with the tornado, which was really stupid. But that's my tornado story.
Nice. That's good. Well,
nobody died.
Live and learn next time.
Yeah. If you're in Kansas, you cannot go into anywhere. Just understand that. Just keep driving. Probably drive faster to get. That's what I would have done differently. I wouldn't have stopped, because stopping let the tornado catch up. So just keep driving if you're in Kansas.
Lesson learned. Mm-hmm. All right. I'll go. Have either of you guys ever been to like a local theater production? And I'm talking like local theater, not like the state theater, like local theater.
Yeah.
I went to a dinner theater, Disney themed murder mystery show on Saturday night. JC, this is not for your children. It was very adult themed, but it was actually pretty good. It was pretty cute. There was a whole
show.
Like
an adult Disney? Is it like Goofy, like hooking up with Daisy? Like what's going on there?
No, well, Peter Pan was flamboyantly gay. Prince Charming was in the closet. Snow White was a sassy black woman. It was very funny. I should say it's very funny.
Tinkerbell gets down.
Yeah. It was pretty funny. Some of the jokes fell flat. There's a lot of very contemporary jokes. There was a joke about Pete Hegseth. There was a joke about the drones in New Jersey. There was not really too much political jokes though, besides the Pete Hegseth thing. But it was pretty cute, honestly. The whole thing was like Walt Disney got murdered. We got to solve the mystery, and then everyone gets to kind of guess who the murderer is. It was fun. I enjoyed it. So Once Upon a Crime, good stuff. A lot of cursing.
Nice.
Yeah.
A lot more cursing out of Spencer does a lot of Disney things considering he has no kids. You better start saving up, brother.
This is not for kids. This is what I'm saying. This is for grown-ups. It actually, there was a warning, and the humor was for like 18 and up, right? It was very mature themed, but it was funny.
Nice.
You know, you reminded me, Spencer, you know, when we changed the agenda like the night before the portfolio accelerator starts, we were actually at Acme Oyster Bar, if you want to throw up slide 1, and we were there with like Colin Goldschmidt, myself, John Salama, Strazza, Weitzel, I think Fonz was there, and let me tell you something, guys. These freaking oysters. First of all, I learned how to eat oysters when I was 14 years old at this establishment.
Time out. Is that crab on top of the oysters?
Good. That is indeed crab on top of the oysters. So it's char grilled oysters with the Romano cheese and like all the schmutz that the New Orleans people have, which is very unique flavors. Obviously, like they don't have that in the rest of the country. So very unique flavors on the schmutz, the Romano cheese, and then crab on top, bro. Me and Mary were just like crushing it. Like, wow. Everybody was there. Not everybody was there. There were a bunch of people there, and we were like changing the schedule and stuff like that. Acme Oyster Bar. And then I was with Blair, and Blair's like, oh, yeah, that's great. But if you go across the street to Felix's, they're even better. And I'm like, nah, I don't think so. Anyway, we went to Felix's just to check it out, and they were not better. They were very different, actually. But they were not better. They were different. And they were good too. But man, the ones
this is called Acme Oyster Bar. Is that what this is?
Acme Oyster House, maybe.
House. Okay.
Acme Oyster. I think it's Acme Oyster Shack. I don't know. Acme Oyster something or other. That's where I learned how to eat oysters when I was 14 years old with my dad. So I went back there. Man, they were so good. And then just got to show you this picture of Louis, just because it was just such a money shot there. Look at this picture of Louis. I mean, just look at him. Look at that.
Nice.
I love it.
Those oysters looked like they were tailor-made for me. I love seafood, so I love crab on my oyster. I never had that before, but
I don't think I've ever had that either. Now that you mention it,
it looks pretty good to me.
Pretty freaking good, man. And then you got all the schmutz there on the bottom, so you dip the bread in there. Earmuffs, Perlman. You know.
Oh boy.
I have a confession to make though, because I don't really say. I've asked JC a couple times, hey, what do you mean by this? I'm from East Cleveland. I have no idea about any of this stuff. I have to ask Beth all the time, hey, what's JC talking about here? What's this type of food? So one day I'm going to go out with JC and I'm just going to try this stuff. I don't eat much seafood, but I'm going to try it. I'm going to try whatever.
Nor should you. You live in Ohio.
Listen, I'm in Ohio. I'm not good at many things, but eating, I'm so good at. I'm like really, really good.
I'm always impressed by your knowledge of everything. Like, everything about it. And I'm like, if I go out with JC and he's ordering crazy shit, I will just eat whatever and just try it.
It's not that crazy.
Yeah, I just don't know. I've never seen it. Beth eats all that stuff. We go out. She orders all types of good stuff. I just go. I don't know. I can't do it.
So. I got you. Don't worry. Do it. Yeah. You sit out. You listen. You stick with me, kid. I got you.
All right, let's do it.
All right, let's wrap it up here. If you guys want to, if you have any questions or tickers on your mind and you want to send them in to be discussed on Chart Request Live, email us questions@stockmarketmedia.com. Chart Request Live is at 1:00 today. We'll take your requests and answer your questions on that show. Thank you, Jason. On tomorrow's show, we'll have Anne Marie Band. She hasn't been on for a minute, so I'm very excited to talk to Anne Marie. She's great. And Gold Rush members, you'll get your weekly video today.
Yeah, we're filming it today. So we'll see you guys today with a report and a video. Excited to do that today. We got a lot of stuff to talk about.
All right. Let's get out of here. JC, good to have you back. Thanks for watching. Smash the like. Thank you, chat. Go make some money, all right?
Adios.
I can't take no loss.